Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right. A busy Friday for us and kind of a busy week for us as well. We're going to talk cold storage, livestock slaughter, cattle on feed. But to kick things off, let's recap what happened this week in the markets.
Yeah, on the cattle side this week, fed cash cattle were about 75 cents higher this week. Those feeder cattle markets were anywhere from $2 to $5 higher this week. On the future side, the August live cattle futures contract was down nearly $3.20, and the August feeder cattle futures contract was down 70 cents. Maybe a little less slide there as we saw July corn futures that were down 36 cents on the week. On the beef side, the choice box beef price fell $2.25. Really ribs and loins led the way for lower components of that choice box beef. On the hog side, cash barrels and gilts were $1.10 higher this week. The August lean hog futures contract was down nearly $1 this week. The pork cutout value gained some ground, up $1 on the week. And actually, it's worth noting that puts the pork cutout value just about the same place as it was a year ago at this time.
Still some pricey bacon, but I'm okay with that.
Not everything is cheaper, right?
Not everything is cheaper. All right, let's talk weekly slaughter numbers as we take a look at this week. What are some things that we should notice?
Yeah, so for the week ending June 25th, USDA is estimating cattle slaughter at 666,000 head this week.
I'm
down
glad you're
1,000.
saying that and not me.
Down 1,000 from a week ago, up 6,000 from a year ago. On the hog side, a run of 2.304 million head of hogs. That's actually 68,000 head below a week ago and 50,000 head below a year ago.
When we look at how we're running year over year, what has been the change on both the cattle and the hog side?
Yeah. So we continue to run cattle slaughter. It's year to date 1% above a year ago. On the hog side, we continue to catch up a little bit as we think about how we started the year. We were well below year ago levels in slaughter for the first few weeks, at least, of 2022. But year to date, we're now down 4.3% in terms of hog slaughter, according to the USDA data here.
Let's talk cold storage. And a little surprising, maybe I was the only one taken by surprise, but I was a little shocked to see the numbers this week.
Yeah, so I think it's worth starting on the pork side of these May ending cold storage stocks. We came in a little more than 540 million pounds of pork ending stocks for May. For the first time in a long time, we actually crossed over previous year's numbers. So May of 2022 was above May of 2020. And that's the first time that we've seen that in several months. So some rebuilding of stocks occurring. I will say when we look at your favorite product, bellies, they continue to stay reasonably tight, but not as tight as they were last year. Really, the difference here is what we've been doing in terms of pork loins that have stayed above at least where we were back in 2020. On the beef side, the story here, in some ways similar, about 520 million pounds of beef. We've frankly been fairly flat in terms of beef ending stocks as we've looked across 2022, and that may seem like that's good news, but seasonally we tend to move lower. In 2021, we started the year at the same level as we started 2022, yet we were at 420 million pounds of beef in 21, and now we sit here at 520 million pounds. So we are seeing some difference in terms of growth in those ending stock categories for beef and pork relative to year ago levels.
Does that have any implication when we're talking about rebuilding some stocks, lack of demand or a slowdown in demand on the consumer side of things?
So I think it's hard to pin it all there. I sometimes wonder if some of the port slowdowns, although we may not talk about the same number of ships waiting to be unloaded, I think we still see a lot of the same bottlenecks trying to get pork and beef exports out of the United States. And so if we don't get those exported, do we end up with that product in cold storage for a period of time? I think that's some of what's going on. I also will not say that you aren't correct in terms of, are these the early indications that maybe we're starting to see a little bit of slowdown? I don't want to put too much emphasis there yet, but we're going to want to watch that data as we go forward.
Livestock slaughter, as we take a look at those numbers, I think it's interesting. We continue to see some lower weights.
Yeah, so boy, the cattle side of this equation, when you look at April, an average slaughter weight of dressed weight of about 832 pounds, and for May it fell to 817. We haven't been there for a while, and perhaps some of these higher corn prices that we've been facing have started to reduce those slaughter weights. All in all, you look at livestock slaughter year-to-date beef production, so January through May, 11.6 billion pounds. That's 1.5% above year-ago levels. Would have been higher had it not been, again, for those lower dressed weights. Now, what continues to stick out to me is beef cow slaughter. When you look at year-to-date 2022 relative to 2015 to 2019, we're just a measly 45% above those old levels. It just tells me we're not doing anything but continuing to trim on the herd. And so I think that's, interesting. When you look at heifer slaughter as well, I shouldn't forget both sides of this equation. So heifer slaughter, 21% above the 2015 to 2019 average for the first 5 months of the year. So slaughtering more heifers, slaughtering more cows. We're doing both sides of that. To me, we're just going to start to get tighter in terms of available cattle supplies. On the pork side, here we actually are running higher weights, about 3 pounds above year-ago levels for May for hog dressed weights. When you look at overall pork production, it's down 3.6% relative to a year ago, at 11.3 billion pounds.
When we look at those beef cow slaughter numbers and heifers as well, how does that set the stage? And I know we're going to talk cattle on feed here just in a second, but how does that set the stage up for herd size, production, availability of product, looking down through the rest of 2022 and well into 2023?
So I think there's more to come here to this story. I keep saying, everybody hold on. We'll get to the last verse of this song at some point. It may be 2023, but the last verse is going to be the one of a lot less cattle. There's very few ways I think we can end up in a situation where we don't talk about a significant contraction in the number of market-ready cattle as we get further into 2023, given what we see happening in terms of both beef cow slaughter and heifer slaughter. I will say, I've had this conversation and I've said it out loud many times as well, drought being the reason why we have less cows today. And yes, that's been at play, but I do think it's more than drought. I think lack of profitability has made some folks decide there are better things to do than be in the cow business. And so it may take us a while to turn that ship, even if we start talking about high enough cattle prices to talk about some profitability.
I think at that point too, we have to talk about lower corn prices, don't we?
Absolutely. All right. So it's been a tough week on at least corn futures. So I hate staring in the crystal ball. All right, these days with all of the volatility that we see. However, Megan, we could continue to slide lower on corn prices, especially if the crop here looks better, and if we keep getting tighter on market ready cattle. We could have higher cattle prices. So the world could look a lot different really quickly. The volatility that we faced, I don't think goes away as we look ahead here in at least the short term. So what you and I talk about today and what we might talk about come fall could look like a very different picture, yet it's going to take cattle producers a while to decide. I think there's enough profitability to perhaps expand numbers at some point. I see no reason why January 1 of 2023 beef cow inventory is going to be anything but lower than where we started this year.
I would also assume that means not just people in expanding, or maybe people who have taken a big step back, taking another step back in.
So perhaps you ask another
about the age of cattlemen, just in general, and that's not meant to be a derogatory comment, but I could look at it in our farm as well. My dad and his uncle are nearing retirement age, and if there's this much volatility continue, how many are going to say, you know what, here we go?
And I think once you make the decision that you want to maybe get out of the cow business, it's hard to get back in. Fences get out of condition. Water availability becomes more of an issue. So it's some of the things that you manage and take care of on a daily basis when you're in the cow-calf business that maybe all of a sudden when you're growing soybeans or something else that you don't worry about. And by the time you think about adding that cow-calf enterprise back in the mix, you look up and go, oh, I don't want to fix that 3 miles of fence I need to fix to be able to hold cows in anymore.
All right. Grand finale this week. Let's talk cattle on feed. You are going to get off easy this week. I won't even make you talk about cattle market legislation out of the Senate. We're going to spend the last few minutes of our time talking cattle on feed numbers. Let's walk us through that report.
Yeah. So first of all, I think, you take the tone of the report, and probably you and I have been talking about bearish tones for the last few of these cattle on feed reports, where we've come in heavier in terms of both placements as well as on feed numbers, to now being able to talk about some positives. Placements in May were 2.1% below year ago levels. That actually falls outside the pre-report range. So we placed fewer cattle than anybody would have projected pre-report. Cattle on feed as of June 1 came in at 101.2. That's right near the low end of the pre-report range. And so tighter than maybe anticipated numbers. That gives us, I think, no reason to be bearish out of that report, and a little reason to be somewhat bullish. When you look at the by weight categories, we have seen a reduction in weight categories 700 pounds and above, which might mean a few less market ready cattle as we look through the next few months here.
When will we have the next look at the heifer breakdown? And is that next month, or is that just once a year? I can't ever remember.
Yeah, so I think we might actually get it next cattle on feed report. So it'll give us a little more indication of what we're doing heifer versus steer wise.
When we look at just these numbers in general, I mean, you have been pretty clear. We can't continue to place this many cattle. Is 1 month obviously doesn't mean a pattern, but is this a good sign that maybe that part is going to slow some?
So perhaps, and I think the point here, right? So change in placements this year relative to the same month in 21. Back in February, we placed 162,000 more head. In March, 8,000 head less. April, 16,000 head less. Now May, 41,000 head less. I'll take 4 points and make a trend out of it. So to me, we're starting to maybe find ourselves working through and frankly, not being able to pull more calves forward as well. I think that's part of what's been going on as we look at these cattle on feed inventory numbers. So we could certainly get a lot more bullish if that trend continues for the next couple of months.
Anything else on that report we need to touch on?
I think that's the big pieces for that report, Megan.
So I said I'd let you get off scot-free, but we saw the House Ag Committee push cattle market bills, we'll call them that, out of the Senate Ag Committee. Now they await floor time in front of the Senate. With everything that's going on, and in an election year, does it get a little wobbly on whether we potentially see this come before the full Senate?
Ask me after the session is over, and I'll tell you. So there's a lot of, and so this is nothing directly related to cattle pricing, but the Senate's going to be busy dealing with a lot of topics, I think, between now and when we get serious about elections, and finding floor time for anything is going to get hard. And I will say right away, I don't think the Senate's going to take up anything debate-wise unless they know they have the votes at the end of the day. And so for me, the discussion about whether we see cattle pricing on the floor a lot is going to be a lot of folks going around and counting hands in the air. And if we get 60 hands in the air, yeah, sure, I think we could actually see it come to the floor. But if we don't have 60 hands in the air, I'll be surprised.
All right. Next week's reports.
Yeah, so it'll be a big one next week for hogs. Hogs and pigs midweek. We also get USDA's acreage, June acreage report out, and a restaurant performance index.
I will say, for being a livestock girl, I do get really fired up about that acreage report.
From a livestock perspective, we want as many acres of corn and soybeans as we can get out of that report.
Absolutely. Scott, have a great weekend. Stay cool. I'm sure you're dealing with the same kind of heat wave we are here in the Mid-South. So I could take a break from these 90-degree temperatures.
I think tomorrow's going to be tough, and then hopefully it gets a little better here for a while.
All right, Scott, have a great weekend. We'll talk to you next Friday.
Sounds good, Megan.
So have our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments there. And if you're looking for some more in-depth commentary and analysis on the commodity markets, check out the weekly commodity market update with my cohort, Will Robinson and Ben Brown from the University of Missouri. Have a great weekend. I'm Megan Grebner for Brownfield.